Bob Anderson. I am going to add to my trading journal, my digital trading journal, day 4 of my Apex Trader funding account. So just to kind of recall, day 1, I had like 400 hours. Day 2, I had break even. Day 3, I had like $480, something like that. Net of commissions and all that, I was sitting at like 845 or something like that. And then today, I came into the trading market and I took 2 trades. Both went immediately in my direction of winning, which is good. From the moment I went in, they both went in the proper direction. One of them rolled back over and took me out because I was pretty conservative with my stop, and then it took off and actually worked. And then the follow-up trade after that, which set up perfectly, I took that one and it actually took off, and I got like $275 or something like that. Not a big trading day. But again, it's a positive. I want to mention 2 things before I go much further. One is that my funded account started on August 15th. Today is August 18th. So I'm on my 4th day. And I had already told myself I would be content to conservatively work my way through to the end of the month for $2,000. I'm going to explain why here in a second, and then for the month of September, maybe about 3. When I say conservative, I have to explain something. What I haven't described yet or explained is that there is a trailing stop. So the way the account starts, you start off with a $50,000 balance and a $4,750 stop loss. If you go below $4,750, you're automatically out. You lose your account. But let's just say, for example, I take 4 contracts long and they go 5 points. Well, it's $250 a contract, which is $1,000. But let's just say it goes up there and touches the 10 points and then rolls back against me and I go out at even. Okay? So you would think to yourself, oh, no harm, no foul. I didn't lose any money. But that's not how the trailing stop works. The trailing stop flows with the dollars. So if you go into a trade and the trade goes up $1,000, your trailing stop automatically went from $4,750 to $4,850. So if it turns over, comes down and knocks you out at 50, now your trailing stop is only $1,500 below where you're at, even though you haven't lost any money. I can tell you this from personal experience because I blew up an account with a positive balance. So now, how do you get out of that? Well, with the funded account, because it's not a test account, you can keep growing that balance. So I've got to get my funded account balance from 50 to over 53,000 because that trailing stop stops. It stops once you get over the $53,000 level. So your trailing stop no longer trails you. So if you go up to 56, so my point is, if I'm at $53,000 and I take a trade and I'm really going for, a big one with multiple contracts and all that kind of stuff, if it goes up and turns around and rolls over and I go out at break even, no harm, no foul. I don't have a trailing stop sliding up against me anymore. It stops doing that. So that's why out of the gate, when you're trading with your funded account, you have to be conservative because you can't allow it to just jiggle jaggle around and then hope it breaks in your direction if you've got a lot of contracts loaded up on a trade. So anyways, that's the tricky part, and I've been burned by it because I had a test account that I had a positive balance on when I got knocked out. I mean, I was at like $51,000 and got knocked out. So, you know, I had to reread the rules on how that worked. So my point is once I get over the $53,000 and my trailer stops following me, I'm going to get more aggressive with my strategy, but I have to earn my way out of that. So anyway, so let's talk about today's trades, and I'll show you the conservative trades I took. And I'm going to show you something interesting that keeps, again, today was a good day of keeping you out of bad trades. So let's go ahead. I'm going to show you the trades that I did take. Again, here is my 1 minute chart that I used to actually enter my trades. And here is my 5 minute chart that I use to make sure I'm on the right side of the trade. I'll explain a little bit of that today. Matter of fact, you'll see some of that. So anyways, here is over here again is 8:30. And today was actually a rough day because we had news at 8:30 and we had news at 10. So there was just a lot of news along with the open going on in my strike zone of times to trade, which would be from like 8:30 to 10:30. I mean, there was just a lot of different things going on, so the market couldn't get any real rhythm or anything like that. And there you are, you know, trying to make trades, and you just can't really do it because the market's not given any time to show its head. Are we going long? Are we going short? Are we doing anything? No, we're hanging out waiting for news. So anyways, here was the news. This was unemployment numbers and that kind of stuff. It really didn't have that big of a reaction. Now, if you remember yesterday, I told you that this dashed gold line right here was the open, the overnight open, not the market open of 9:30, but the overnight open. See how this just keeps bouncing right off of it. Now just imagine if you didn't have that on your chart. You would have no idea, why does the damn thing keep going? Why does it keep bouncing off there? So you might be taking shorts off of this pattern, which that is a trading pattern, but it doesn't work because it keeps punching right back into your face. Same thing with here. Bam, doesn't work because it's punching back in your face because it's not hitting your targets. There's not enough room. I stayed out of these potential trades all morning through to the open because of this right here. Therefore, it stopped me from taking unnecessary trades, getting knocked out, whatever. This line right here, this dotted gold line right here is worth its weight in gold. Literally, you could take trades off of it with the 5 minute chart. But anyway, so then the open happens and the market rolls down, rolls. Now, look at how it did this. It broke through, came up, and actually touched that gold line, and then wham, straight down. Now, that line that you don't even know exists unless it's on your chart. See how it just touched it? See how it touched it? See how it touched it? See how it touched it? It's a miracle. Anyways, so it touches it right here out of the open and slams down. And then we had news again at 10 o'clock. So again, I had nothing set up for me to take. I mean, it was just all hodgepodge. The candles weren't consistent. I just didn't get a rhythm for anything, or it didn't coincide with my 5 minute chart. So I just didn't take any trades all the way through 10, all the way through 10:30. Now, I'm going to show you something interesting. Now you might say to yourself, but Bob, this setup is what you talk about. You rolled up, you broke the pivot of your dot line. Here's your pivot. It rolls it down. You've rolled up and broke it. What makes you think we're going to go long back into your gold line, and then wham. Oh, wait, it didn't work though. Well, this This time zone right here is 10:23, 10:24 time frame. Let's go over here to my 5-minute chart. And I'm going to show you why I didn't take that trade. See this? This is your 10:20, 10:25. You see your trend lines for your 5-minute? It's down. This setup over here, if you just blindly use the 1-minute chart, is showing you to take a long. Well, who wants to take a long against the big money? Wham! See? So I didn't take this trade right here because I was looking at my 5-minute chart at the same time. I circled that to show it to you because that's where you get your fake outs. Your fake outs that, you know, that you may think, oh, I got the right trade, and boom, 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 and all of a sudden it slams against you. Well, it's because on the higher time frame, these guys over here with the big money, they're playing that chart. They're not playing this chart. And you get slammed. So anyways, I didn't take that trade because it didn't agree with my 5-minute chart. And that's why I said I used my 5-minute chart to show me the direction, and I used my 1-minute chart for my entry. Anyways, so then we had a breakout, a run up, blah blah blah, and again, look at how it hits that imaginary gold dotted line right here. I mean, this thing ran up 10 points and then rolled over from that imaginary dotted line, that invisible line out in the middle of nowhere. So anyways, and it did it again, pushed it down, rolled it up, bam, down again. Like I said, you could actually trade this line and make money. You could trade that line, honestly. But anyways, I don't trade it in general. But anyways, I'm going to show you the actual trades I did take. I ended up having to go past my normal time of 10:30 and just let the market finally settle down and get into some rhythm. And then I took my trade right there. See, we had broke up, and over on my 5-minute chart, our gold line had crossed this dotted line here. So now on my 5-minute chart, I am coinciding with what's going on here. We are now going long, finally, on the other side of the gold line. I entered right off my gold line, and I entered my second contract on my break of the gold line. So my two entries were 81.75 and 83.00, double zero. Okay, I was excited here because I was like, oh man, this is it. I'm gonna make one trade. I had it up. I had my target up for $500, so 5 points. And the damn thing at 11:30, which I've told you guys about 11:30, is when the European market closes. It gets spastic sometime. The damn thing came down and just nailed me right here. I had my stop at even, got knocked out. Boom, I'm done. You know, trade out. And look at how the trade actually worked. Just continued going. But again, don't get upset. I'm not upset. By the way, it was up about $250, $300 when it rolled over. It knocked me out. So I'm not going to let a $200, $300 trade in my favor turn into a $100 to $200 to $300 loss. I'm just not going to do it. So I got knocked out, but I didn't get upset. I let it do it again. It came in, touched. I rolled it right up. Bam, bam, two longs. One was at 85.75. One was at 85.25. And it got pretty stale up in here, and I took my money out, and I got $280, $287. Now, what that does is that puts me at about $1,080 in 4 days, which is, again, it's not a lot of money. But I'm trying to do, you know, $2,000 by the end of August, which I'm 4 days in, and I'm already over 1,000. And I'm just trying to dick and dunk my way there. And I'm trying to get myself to the point where I don't have that trailing stop following me anymore, so that I can trade a little bit more freely, where I wouldn't be concerned that this thing rolled up and then rolled down like this one did. See, when this one rolled up and rolled down on me, my trailing stop was catching up to me. So when this one rolled up and took me out there, I filled back. It's hard to explain, but my trailing stop didn't move anymore. Okay, it's kind of hard to explain, but so now I'm back out to a full $2,500 on my trailer. That's how far behind it is on me. So anyways, that was it. I took those 2 trades and I'm done. Let me see here. I thought I had something else I wanted to show while we're sitting here. Oh, maybe not. I can't see. Look at that. Bing, bam. Bing, bam. Bing, bam. I mean, it's just an imaginary number in the middle. If you don't have that on there, you probably would have no idea why does that thing keep rolling over at that spot. Bing, bam. I mean, it's just hard to explain. But anyway, so as you can see, though, it spent a lot of time all day long around the overnight open because the market really has no direction right now. I don't really think that that the bulls or the bears are trying to do anything right now. So, anyways, that's my market update of my day 4 trading strategy. And I think that I consider this, you know, $260, $270, whatever the heck the number was. It's not a big number. I get that. But that's not what it's about. Remember what I said in my original why am I doing these videos? I talked about the fact that I'm just trying to figure out how to come up with an account that I can build some money up in, get a little bit more aggressive with, make some more significant money when I don't have that trailing stop thing chasing me anymore. And I'm doing it with their money, not mine. So anyways, I got to baby step my way there. No cowboy no more. So anyways, that's it. I hope I covered some things in here that kind of help you see what's going on. And I mean, there were some decent trades after the market calmed down a little bit today. But you know, I've got a job, so I can't sit here and screw around with it. And I'll be honest with you, it's pretty lackadaisical. Again, it's dead summer. And so the market movement is pretty lackadaisical. It's hard to get it to move, to hit your targets and things like that. It's just not a lot of oomph in it right now. Not like what we'll see in September when things heat up again. So anyways, that's it. And I'll talk to you later. Bye.